Uncertainty surrounding the upcoming elections in November posing one of the biggest threats to stability of the economy and flow of funds into the country, as some business operators and investors become apprehensive that a change in political party administration in the November elections could affect their businesses negatively. We speak to financial consultant and businessman Charles Mensah to get his thoughts on whether businesses have anything to worry about. Plus, we take a look at the stock exchange market when Beta Atubiga joins us to tell us how the stock market has been faring. I am Emmanuel Abwaji-Yafi. You're welcome to Business Live. On this platform, we take a look at some topical business and economic issues in the country and how they are affecting the economy. Let's begin it all with our business news roundup for today.
The quest to position Takoradi Port as the oil and gas service hub in the West African sub-region has been boosted by General Electric's Oil and Gas, a subcontractor of Tullow Oil, as the company steadily constructs its fabrication yard in the port. Construction of the facility, which sits on a 10,000-acre square meter land, is part of Takoradi Port's expansion project and will serve as the base area for General Electric's as it plans to produce undersea and heavy equipment for the oil and gas business in the port community. The fabrication yard will house a laydown for General Electric's to store equipment and work materials, a workshop structure and offices for General Electric Oil and Gas, and cover a wide area that enables them work in an unconstrained environment. Principal Public Relations Officer of Takoradi Port, Peter Bediako, shared the economic benefits of the facility after a site inspection tour. Currently, about 98% of personnel working on the project are Ghanaians, and this adds the critical role that the facility will play, not only for the Takoradi Port, but the national economy as a whole. The Ministry of Trade and Industry is working to address liquidity challenges facing local cashew processing companies to ensure prompt payment to cashew farmers. The sector minister, Mr. Ekospio Gabra, who said this, noted that there was a need to adequately address liquidity challenges that had plagued local processors by exploring avenues for credit facilities to enable them to pay farmers on time for the supply of cashew. Mr. Gabra said government is considering many options, including the establishment of a cashew development board to serve as a regulatory agency for cashew production and export in the country. He indicated that the creation of a board or council would ensure the availability of buffer stock at all times for local processors. Mr. Gabra said this at a meeting with the members of the ECOWAS Community Development Program Media Network in Accra last week. Despite a rosy picture being painted about the Ghanaian economy by government and its cohorts, it seems such is not the case. That is, if the International Monetary Fund's latest World Economic Outlook is anything to go by. According to the IMF, Ivory Coast is Africa's fastest growing economy. The West African nation's GDP is expected to grow by 8.5% this year. The Ivory Coast economy has benefited from government policies and structural reforms, which have resulted in strong inclusive growth, according to the World Bank. Strong economic activity has been maintained through a strong aggregate demand and increases in investment, both public and private. Following in second place is Tanzania, with projected growth of just under 7% this year. Senegal completes the top three with 6.6%. Countries from across Africa feature in the top 10, emphasizing the economic gains being felt around the continent. The Institute of Chartered Accountants Ghana, ICAG, has challenged women in accountancy to rise from obscurity and take up the mantle of leadership. According to the institute, women in accountancy can hold leadership positions if only they step out and climb up the corporate ladder against the odds. Delivering a speech at the 26th graduation and admission ceremony of the institute in Accra, President of the institute, Professor KB Omane Entry, urged women in the industry to challenge themselves with leadership roles in the country. He said women accountants in Ghana must be empowered to ensure a rise in leadership roles of women in businesses, industry, and every sector of the economy. Not only that, they must rise above inhibiting circumstances so they can go to the top. Reports say Ghana accepted 1.123 billion Ghana cedi for a 3-year domestic bond with a yield of 24.5%. Proceeds of the bond, which was open to offshore investors, will be used to finance the government's 2016 budget. It was sold through a book builders system arranged by Barclays Bank, Stanbic, and Strategic African Securities. Total bids received amounted to 1.13 billion Ghana cedi, with 71% of that coming from offshore investors. Ghana is implementing a 3-year aid program with the IMF to fix an economy dogged with budget deficits, inflation, and a widening public debt. Ghana's total public debt is around 70% of GDP, while consumer inflation stood at 19.2% in March, up from 18.5% the month before. The yield on Ghana's weekly benchmark 91-day Treasury bill was 22.8017% last Friday.
All right, so that was the business news roundup for today. Now to the issue of the day. The uncertainty surrounding the upcoming elections in November is becoming one of the biggest threats to stability of the economy and flow of funds into the country. This emerging trend, as some business operators and investors are becoming apprehensive that a change in political party administration in the November elections could affect their businesses negatively. Some economists also believe the outcome of the elections may have an impact on the economy. George Rafi highlights some of these concerns in this report.
One of the biggest casualties of this election fever is government. Joy Business is learning that some investors are dragging their feet in terms of lending to government because of the November elections. And even for those who are willing, they are asking for a high interest on the expected funds to be given to government. A typical example is the concerns by investors on the upcoming Eurobond. Sources say one of the issues that came up during the recent non-deal roadshow is the uncertainty about the elections, a development that could see most of these institutional investors ask for some high interest in the region of 12 or 13%. The challenge is not only hitting government, but a lot of private businesses, as they are also struggling to attract the required capital to expand their operations. And even those who get it, it's coming at a high cost. Some businesses and even individuals are also holding on to their money, which is seriously affecting banks in their quest to attract more deposits to lend to businesses and individuals. Joy Business understands that some firms are even rushing to buy more dollars and send it out as a means of protecting their investments just because of the uncertainties surrounding the November elections. For some economists, whichever way you want to look at this, it seems like the country may not be able to cross this hurdle until we get over the November election.
Meanwhile, one of the biggest challenges that the government is currently facing is a lack of investor confidence in the economy. This is despite signing up to the IMF program, which was believed could help restore investor confidence and fast-track the economic stability. However, almost a year after the IMF program, government is still struggling with this, despite progress made with some economic reforms. Speaking to Joy Business in Washington, D.C. recently, Head of Research at the Standard Chartered Bank, Razia Khan, said government should be patient as progress made so far is an indication that confidence will come very soon.
There are a number of things that are important here. Perhaps the first point is that there needs to be a broader realization that in the absence of an IMF program, Ghana would not have been any better off. It would have been even more challenging to get any kind of foreign portfolio investment. But in terms of the expectation of when investors take a different view of Ghana, we need to be realistic about that expectation. Investors are enthused about what they see. For now, one of the potential potential stumbling blocks is trying to figure out how it is that Ghana deals with upcoming commitments, upcoming maturities, in particular the 2017. We need to understand that for as long as there's still some uncertainty out there, Ghana isn't going to see the full, nor is it going to see the immediate benefit to the reforms that it's already put in place.
You work with a lot of investors out. What are their critical concerns? Why are they not responding?
There are a few points to consider. No one should be expecting that because there was 1 year where there didn't seem to be a fiscal deficit overrun, that there's going to be an immediate investor reaction. But the broader context is also important. What are investors still concerned about? They recognise the progress that has been made with fiscal policy, and until some of those bigger concerns are dealt with, we shouldn't be anticipating that there is going to be a rush back in to Ghana's debt markets by foreign investors. What matters and what is going to be very crucial to the outlook for Ghana's economy is whether we can see changed behaviour from domestic institutional investors.
All right, so now we would like to explore the issues of uncertainty and of lack of confidence in the economy more further as we are joined on the line to take a look at some of the issues we raised. We have Charles Mensah, a financial consultant, on the line to tell us more. Thanks for your attention and thanks for joining us on Business Live, Charles Mensah. Now, do you have this feeling of uncertainty preceding the November election, and should businesses and investors have any cause to worry about?
Thank you very much. I think basically every business person have one way or the other some uncertainty in the market in terms of whether you are going to achieve your target in terms of your revenue streams, in terms of your expenditure pattern, in terms of profitability. And therefore, business itself is full of uncertainty. Now, however, if election year comes on, then it increases that level. But be as it may, as an investor, what they usually would look at is the policies that government puts in place to keep them happy. What am I talking about? If it is that more taxes are raised in such a period, obviously people cut back on their investment. If it is that policies are equally done to encourage them to expend more, they will invest more. Now, listen to my dear lady. I mean, the good point that you made is that we need to encourage domestic investment, because out there, in terms of foreign investors, they really will look at political stability, which we already have. But of course, when the elections come into play, they try to play the game. And therefore, encouraging domestic investment, encouraging domestic investors, allowing domestic people to partake in the money market sometimes helps us. And that's what I think we should be looking at more as a country, that let's encourage local investors, let's encourage local financial institutions to partake in the local market. And then we can have a lot of progress.
All right, now, this is certainly not the first time that the country is going through this period. We've had elections in the past. Now, why is this particular elections so unique? I mean, and why is it that people are so apprehensive of this particular election coming up?
I'm not sure that people really, in terms of I'm looking at for in terms of investment. Investors really would read about what is happening in a particular country. They follow lead. But there are equally some who see this as an opportunity to come in now and try to invest in particular sectors. So it is the sectors that is available, or the opportunities available. So we've always had this thing coming in play. But it is you who should take up the opportunity. Because anytime there's uncertainty, there's an element of risk, of course. But there's an element of opportunity there. And that's what most people will look at. So either you can look at opportunity or you can look at the uncertainty and the risk associated with that. So for some of them, because I've never seen election year, some of the huge investors shutting their factories because it's election year. They rather shut their factories if the cost of doing business in Ghana goes up, if the cost of finance goes up, if they cannot get energy. These are the rare reasons why people will shut down their factories, not because there's an election. And I think we should be able to decouple the two. Because unless we try to decouple the two, we always will say that election year investments will not come. But the rare reasons what to attract people to come into a country to invest, it is the cost of doing business, the cost of capital, the access to the market, access to energy, and so on and so forth. If there's an election year, so be it. But these are the fundamentals that we ought to get it right. And that's the focus for every investor. The political stability, yes, they know there's been stability in the whole of West Africa. So it's not as huge risk as it was before. But now the real thing is the fundamentals, which access to the market, cost of capital, cost of doing business. These are the real driving force for investing, for running a country.
All right, now, Charles, let's look at this other option. I mean, election years are normally characterized by high spending by governments. Now, can this phenomenon lead to increased inflation, and how would it affect businesses?
If indeed there's an increase in inflation, obviously the cost of funds will go up, because every bank will adjust their interest rate, and therefore the cost will go up. So nobody wants inflation to go up. But we've had a situation where, I don't know whether they've passed the Fiscal Responsibility Act, where government itself cannot spend more than is approved by the budget. If it is that we can hold ourselves responsible that we will not exceed the budgeted figures that has been approved by Parliament, unless anything is approved by Parliament, we will not exceed that as a country, then of course there will not be inflation. But it's election year, so maybe the government of the day may exceed the expenditure that has been approved. Once they exceed the expenditure, we'll have a problem. Now, look, the fuel prices, the crude prices is going up. We are having problems with the FPSO here and there. So obviously, these are room for expenditure to go up, and it's likely to go up. I'm not sure, but it will go up, because if FPSO is not happening, the gas is not flowing, we will be forced to buy crude, and then the price of generating electricity will go up, and it will pass on to the consumer and the factories. So obviously, to fuel inflation. So it is there. It's going to happen. How do we keep it in place?
Okay. Now, after going through the IMF, there's still belief that investor confidence is still like a mirage. How does this, I mean, how do you assess this particular development, and how does it affect businesses and the economy?
Can you come again?
I was saying that after going through the IMF program recently, lack of confidence, investor confidence in the economy is still a mirage. It is still not realized. Now, how would this affect the business community and the economy as a whole?
I think in the country that goes through the IMF program, it sends a signal that at IMF, like let's say the auditors are there, so they're keeping their eye on expenditure, they're keeping their eye in the books. So it rather encourages you to come in there to invest in a particular country, because you know that you are assured that the IMF is issuing, or the IMF is keeping checks on the numbers. So there's an assurance there. But where it doesn't also mean that if the IMF is not there, there's no assurance. Anytime the IMF comes in, that means that there was a challenge, and they are coming to help you to overcome that particular challenge. So in terms of the investor confidence, there's a mix here. Because there's a mix, because what if the IMF leave? Would they go back to where they came from in terms of the expenditure? Would they overrun? What if the IMF stays? That means that anything we can do, we have to clearance from the IMF. So there's a mixed bag when it comes to that particular situation. But I think that as a country, we ought to encourage local businesses, local partners, because the local businesses cannot go anywhere. They are here. And therefore, if you encourage them to a level where you are getting incentives, they are getting tax breaks, they can invest more, they can employ more, and then we can reduce the unemployment level in our country. And then we can even encourage them to do value addition of our raw materials, instead of always seeking the help of foreigners to come into the country to help. We should encourage more local investors, my brother.
Okay, thank you very much, Charles Mensah, for those thoughts. That was Charles Mensah, a financial analyst. Now we're taking a break here on Business Live. We'll be right back after this. Thanks for staying, and welcome back to Business Live. It's now time to take a look at developments on the stock market, and I've been joined by our regular analyst and researcher of the stock markets, Bertha Atobiga, to tell us what actually transpired. Bertha, good evening and welcome.
Yeah, good evening.
Now, what transpired on the stock exchange last week, Friday? How did the commodities fare first?
Okay, just a brief one on the commodities market. Last week happened to be very positive because we saw crude oil, we saw gold and cocoa appreciating in value, comparing it to the previous week. So crude oil actually closed at $44.81 US per barrel, and then we saw gold closing at $1,246.22, and then cocoa was at $3,107 US per on the world commodities market. Now, when you look at how the CD actually fared against major trading partners on the interbank market, that is what we Gold Coast actually look at. And the major currencies we consider is the pound, the euro, the dollar, and then the CFA. Now, with a daily, an average daily gain of 1.30% against these currencies, we saw the year to date, that's the Gold Coast CD index, closing at 0.93%. That's the year to date depreciation. The CD lost marginally to the dollar and the euro, but it gained to the pound. So we can say that it's still in its stable trend. So the CD is still, we're still expecting some level of stability in the short term for the currency on the interbank market, and even on the forex market. We're not hearing much noise about the CD depreciating and all that. It has been relatively very stable. And last week it closed at 3.81 to the dollar, and that is quite impressive because previously it was at 3.82, and that is positive news for us as well.
Right.
So we can say that CD did well, and
That's
then
good. That's
commodity market was positive.
Exactly, that's very good news. Now, can we take a look at the equities? I mean, the financial equities have not been doing well in the past. I don't know how it ended.
You know, I was listening to the earlier on interview, and you know, this particular year, every election year, historically, the equity market, that's the stock market, usually does very well in election years. But this particular year happens to be an exception because we are not seeing that positive returns on the market. And you look at the financial equities, most of them are recording negative year-to-date returns to investors. And last week was one of the, let me say, the weeks that we actually had more equities gaining as compared to the ones that lost. Usually we have probably just one or two gainers, and then we have about five but last week was a different one. And you know, it's like the market is actually responding to what is happening in the economy or what is actually going on, because it's like the risk is very high. People's savings has actually gone down, and we're not seeing that much.
So it's all because of the fear of the elections or the anxiety surrounding the elections?
But usually, under normal circumstances, apart from 1992, where we had an election where the stock market didn't do well, all other years the stock market actually did very well. But this particular year is singing a different tune.
Okay.
We are seeing a different tune altogether for the stock market. Last week, the composite index, which measures the average returns of the market, closed at negative 7.53%, which means that if you invested averagely on the market and on the Ghana Stock Exchange, you would have lost about 7.53% of your investment or your returns. And then the financial stock index, which measures the average returns of the market, went to negative 10.07%. Previously, a week open was a negative 7.02%. That was a significant one, 3.06% drop. It is huge. It looks very small, but it is worrying. And the market is still going to be in this state. We're not going to see it come out magically from this state anytime soon.
So what does that actually mean? I mean, when the financial, composite index drops like that?
It means that very high cap equities on the market, or very strong guys that are on the market that usually make the gains, are losing on the market. And you know, the financial stock equities actually has, apart from Anglo Gold and then Tableau, which are not actually incorporated in computing the composite index, which have very high market cap. The next one is ETI. ETI is one of the financial equities, and it has lost about 33.33% since year open. And then we have Standard Chartered Bank, we have GCB, we have EcoBank. All these equities are large market cap equities, but they are losing on the market. EGH, for instance, that's EcoBank, the share code now is EGH.
Okay.
They were doing so well because when they came out with their financials that were very positive and very impressive, we saw the share price of this particular equity going up. But just the news of from the CFO saying that they are going to expose, they are going to still give out loans to customers, though their NPL has gone up. the NPL ratio had actually increased comparing it to previous year. But they said they were still going to give out loans to customers. And that was very risky because it can affect your bottom lines. And that is what you pay your dividend from. Now, we are expecting some positive realization in this particular equity, that's EGH, because they have come out to declare dividends, which is very, very, very good. If you compare it to the other companies that have declared dividends, fine, dividend is very good. But paying a dividend of about 83 pesos per share, it's quite positive. And we're expecting that this news will actually bring back the gains in EGH. But last week, it's lost again. And EGH lost a peso last week to close at 6 cedis, 84 pesos. Standard Chartered Bank lost 53 pesos last week. This is also another equity with a high market cap. So that is why we're seeing this performance with the major indices. It lost 53 pesos, and that's 3.29%, and it's currently trading at 15 cedis, 57 pesos per share. The only equities that gained last week, we had Aluworks, and then, last 2 weeks, Aluworks and then Guel were the only gainers on the market. And last week, they were the only gainers, and SIC joined the gainers table. So we had 3 equities gaining, with 7 out of the 13 listed financial equities losing on their week opening values.
So in summary, what advice would you give to investors on?
Well, one major thing, is that the market is in its bearish moment or its bearish state. And the opportunity that investors can take right now is to buy now, because prices of equities are relatively low. This is the right time to get in and not the right time to get out, because you might be holding these shares and they've lost so much from beginning of the year. If you go out now, you might be losing on your returns as well.
Thank you very much, Beta.
Thank you to you.
That was Beta Atubika, our stock market researcher and analyst. And that's how we end tonight's show, The Business Life, which came your way on Joy News Prime. My name is Emmanuel Apwaji. Up next is Focus on Africa.